Vincenzo's Gold Crypto Investing this September the 4th, 2025. And excuse me for getting this video out a little bit late. Had a busy day today, but the Bitcoin price and cryptos as a whole have generally been consolidating. Ethereum is down 4%. The Bitcoin price has been down as much as almost 2.5, almost 3%, I think, at one point today. We're going to do all these from the hour time frame. And you can see the one thing with the Bitcoin price, what we were talking about yesterday, you can see, look exactly where you got rejected by, just below or on that 3.5 year, what used to be the rising channel support. And you can see the 50-day moving average is right above it, and the 100-day moving average is right below it now. And you can see we got rejected by the 50 and the pattern support, which is now a resistance. And if this is a confirmed break, it's a critical part of the major support and resistance level, and we've gotten rejected by that. And if this is a confirmed breakdown, that's very critical. And it's been something that we've been paying attention to for several weeks now, because if it does confirm a breakdown, you're going to be looking at lower targets of 104,000. And then if that's a confirmed breakdown, it's a structural pattern breakdown and a change of the overall pattern. And then we would have to seriously look at 97,000, then 90,000, followed by on a different day to discuss. You can see a couple of tracks deep down there, even at $74,000. But that's all for another day. And the current discussion is this current interaction with attempting to confirm a breakdown out of this major 3.5 year pattern. And you can see this pattern that we're talking about when we zoom out. You can see where we started at the end of 2022 going into 2023. And then most recently, we attempted a breakdown back here out of it back in the late spring, early summer, but that was just a fake out, and the computer algorithms hit buy, and it bought it all the way up to 124,000. And now we're sitting at that critical fake out or potentially a breakdown out of this pattern, but now we're at 110,000 instead of like the last time where we were at about, what was that, 90,000, 89,000. So this is very critical, and we're going to continue to pay attention, and we're going to continue to track this on a daily basis to see if the overall structure of the market's changing on a pattern breakdown, or this is just another fake out attempt, right? So it's very interesting. The Ethereum price, or we'll go to the XLM price. The XLM price is sitting there now. You can see we've given up and got rejected by the 100-day moving average. We've slipped to 36 cents, and we're now back into this green trading and resistance box. And we told you, if you fall back into here and get back below those two areas right there, your next major move would come down, you can see in red there, to the 200-day, which is sitting right above the 31 cent bottom part of that green trading zone, which is where you would come down to, where we have it drawn out in red. And that gets you very close to the moving average in the monthly time frame at 29 cents down there in red. And that would be something that's very interesting and very critical that we would have to pay attention to, because that would be signaling that maybe the market is trying to come down there if you continue to breach into this green trading zone and you cannot get back out of it in the shorter time frame. That would even start to bring up a 24 cents to potentially even a 20 cents, because those are the 100-day and the 200-day moving averages in the weekly time frame. The same thing with the XRP price, and you can see this very clearly now with the XRP price too. You can see we drew out the other day when the price was moving back up near the 50-day moving average in the daily time frame, right? It was moving up near the 50-day in the daily time frame, but it got rejected by there. We were theorizing if it continued to move up that way and then eventually got rejected, we were forecasting the 50-day right there in red, that we were showing it track down from where it was at its current price. And you can see from a couple of days ago, come on, from a couple of days ago, it has tracked down, and we were showing how the 100-day would continue to run parallel and we would get squeezed in. And if we broke to the downside, that would bring a 200-day moving average in the play, and this critical horizontal left to right $2.55. And right now we've gotten rejected. off of just below the 292.50. We're just above the 277 100-day moving average. So if you break down, you're going to 255 in the 200-day. That's just below that at 251. And then we would have to start paying attention. You can see the 209, but the 213 in red is the monthly moving average. The 50, the 162 is the 100-day, and the 118 is the 200-day. And if we break down, you can see the mean and the track. That would be something we would absolutely have to be paying attention for going in the medium and longer term if these were to continue to break bearish across the board. But those are all for a different discussion on a different day. We're just currently trying to see what exactly does play out here. And if we take a quick peek at algo, you can see algo is confirmed below. And if we don't get any kind of major support very, very soon, we're coming straight down to this 20% major horizontal left to right resistance and support. And then if we look at Ethereum, we can see Ethereum is attempting to try to stay above, as I got to let you go, this critical 50-day moving average that is almost right on top of the megaphone neckline support. You can see the 50-day moving average is just below that. I think you're going to the 50-day and the megaphone neckline support. And if this continues like the rest of the market bearish, I could see you coming all the way down to the $3,466 in the short term with Ethereum, but that's all predicated if you break this megaphone neckline support. DGB continues to be bearish too, and unfortunately, if this market continues to be bearish, we could come all the way back down in the DGB in the short term here, right? But this is all something that I'm watching because the speculation is this is the manipulated sell-off before the Fed lowers rates in a couple of weeks to just get the retail hands to fleece heist and chase them out of the market before the next great pump. Continue to stay with us. It's as cheap as $3.99 a month to help support the channel. Down in the video description and their pinned comment. And join us in my movement and participate along as I'm not a financial advisor. I'm becoming an asset millionaire via gold and silver bullion and mining stocks, cryptocurrencies, 401k study investing, real estate, some cash on the side for peace of mind, emergencies such as car repairs, home repairs, medical bills. But most importantly, it should be in there earning 3 to 5% in short-term CDs or bonds. And the reason that it's there is for the real reason is to buy a new asset or accumulate into an existing asset. Peace and love, the Rock Side Bro, Jay.